In this video, we'll discuss how marketing agencies should be managing their taxes. So if you're interested in that, stay tuned. We've got a really great one for you. All right, welcome back everybody, and thank you for watching me today. My name is Jordan Steen, also known as Serial Entrepreneur, and at this channel we talk all about starting a marketing agency, building your own personal brand, or really just building any kind of business online using digital marketing strategies. So if you're interested in any of those topics, make sure to hit that subscribe button and the notification bell over here in the bottom right hand corner so that way you get notified every single time we release new content, do free trainings, do giveaways, all of those really cool things. Now guys, when it comes to taxes, people usually get like stressed out and worked up about taxes, but it's actually a pretty simple process. Now guys, I should preface with I am not a certified accountant, so what I say here is not backed by some degree or certification, but everything I'm going to go through you with in this video is pretty much common knowledge, or if you've been in business and you've done business before, then it's something that you're already pretty familiar with, okay? It's not complicated though, you just have to be taught it once, and then from there, you might need a reminder every now and again. So let's quickly go through what you're going to want to know, whether you're a LLC, a partnership, a sole proprietorship, and what you should actually do for your taxes. P.S. I want you to stay tuned to the end of today's video, because if you do, we have two cool things for you. Number one, we're going to give you a guide to pricing your digital marketing services. This is going to help you make sure you make enough money to pay those taxes. And the second thing is what we're looking for is people to comment at the very end of the video what you learned in this video. And all we're going to do is we're going to select the best comment at the end of the video, and we will pick one winner to give 3 months of the mentorship program away to. So all you have to do is comment below at the end of the video and stay tuned to the end and we'll give you that pricing guide. So at least for in the US, no matter your home state, if you make an income of $400 in a fiscal year, you will have to file some form of tax return. Just because you're not in the US doesn't mean this doesn't apply to you. It might not be $400, but usually every other country has some form of rule in place that states if you make a certain amount of income, you do have to file a business tax return. So just make sure to look that up if you're not in the US. Now, once you actually start to look at the tax rate, you have to look at the really three, if you really want to get specific, different classifications for business entities. First is a sole proprietorship, and these types of businesses are taxed at the individual level, meaning we're not actually taxing it and at the business level, we're taxing it on the person's personal income statement. Then next you have C or an S corporation, and these are usually taxed at a lower rate than individual taxes, but obviously if you have a business that's paying the taxes, there's other stipulations that kind of go along with that as well, versus being an individual or a sole proprietor type of business. Just make sure you understand the ins and outs of whatever entity you've chosen or selected as your taxable entity. Okay, so let's quickly go through a tax prep checklist and some of the things that you're going to want to be concerned about when you actually start looking at the revenue and expenses for your business. The first thing you're going to want to look at is a proper form of bookkeeping for your business. And bookkeeping is essentially just taking in all of the revenues and expenses for your business and having them separated in some fashion. I really recommend looking at something like Quickbooks because it takes all of the information, like what the description of the revenue or expense was, how much it was for, and then you can actually categorize them into whether it's like an automobile expense or whether it's software and equipment, something so that way you know where your money is actually going. And that actually helps you with your balancing, your checkbook, or really your bank account, and making sure that you're doing proper budgeting and planning later on as well. Another reason this is super important is because later on when you actually start to go do your taxes for your business to make a payment, you're going to want to know where your expenses lie and which ones you can actually write off, because every expense you can write off allows you to save money on taxes, meaning you spend less. So bookkeeping is actually super important because it allows you to make sure you save as much money as you possibly can at the end of the year. Number two is to review your statements. And so what you should actually be doing if you're the business owner on a semi-regular basis, you should actually go into your bank account and start looking through the statements, the debits and the credits, and making sure that there aren't any outstanding amounts that don't make sense, right? Sometimes things happen. You sign up for a subscription or you pay for something and then you realize later that you either paid too much for it or the subscription kept going but you're not using the service anymore. You don't want to spend money on things that you aren't using, especially in the beginning when your budgets are super tight. So make sure you're reviewing those statements. Most important thing I can tell you guys, if you're already generating revenue for your business, the most important thing you can do is make sure you hire an accountant, okay? Somebody who understands what to look for when it comes to your finances, paying taxes, and making sure that you can write off everything that you possibly can to save as much money at the end of the year. Guys, tax accountants and just accountants in general are not that expensive, especially small businesses. If you find a local tax accountant firm, that's what I would recommend, a local firm where you can build a relationship with that business owner. You'll usually get a much better rate, and it's super, super inexpensive compared to the amount of money you'll lose if you don't have that accountant making sure that all of your expenses are being tracked and that everything's being written off as much as possible, really, is being written off. So that way at the end of the year, you're not spending as much on taxes. Another reason why they're so great is because they do the budgeting for you. And if you can't see where your money's being spent, if you can't predict or project your growth in the future to match what your spending is doing currently, you're going to have a hard time growing, and you're either going to spend too much money and then you're not going to be profitable, which means you're going to go out of business, or you're not going to spend enough money and you're going to, save all that money for the rainy day, but it requires money to actually grow your business, right? You have to spend money. One of the biggest things when I was growing my business, we started getting all this money in a bank account, but then we were like, okay, we need to put this money to work because really it's just sitting here, which isn't helping us grow, right? So we started spending a ton, but you have to make sure that you're not spending too much, right? It has to make sense. And that's where budgeting and planning and forecasting really is going to help your business. So these accountants really have a crucial role in making sure that you're making as much money as possible for your business. And they're super inexpensive. So I recommend looking out for one in your local area and building a relationship with one of those people. So guys, all in all, really just running a business can be super, super complicated, and there's a lot of things that you might not even be aware of. So if you're wanting some other things that you might want to avoid while on your journey to starting an agency, check out this video in the top right-hand corner. It's got a bunch of tips and tricks on things that people do that they mess up on with their agency during their journey, and I guarantee you'll love it. Now, let's quickly talk about how to pay small business taxes, whether you're a sole proprietor, an LLC, a partnership. We're going to discuss all of those really quickly right here. So the first one we're going to look at is a sole proprietor. Now, a sole proprietorship is just something that is run, or a business rather, that is run by one person, right? It's just one person who runs the business, or at least one owner in that business. Usually, once you start to hire employees and things of that nature, it starts to switch up from a sole proprietorship because we're no longer doing taxes through our own personal income. And that's something that we should note about sole proprietorships, is that their taxes are done, like I mentioned, through their personal income. Okay, so instead of running taxes through your business income and then paying it off of your business income, you actually just collect all of the money. You could do it in your own personal checking account if you like, and use your social security number and file your taxes just that way through all of the income that you gathered personally. Another thing to consider is that you will have to pay self-employment taxes, which goes into social security, Medicaid, things like that, if you are running a sole proprietorship, because of the fact that if you're only paying income taxes, you're actually not contributing to the government, right? And they want that from businesses, even if it's just yourself. So that is an expense that you'll also have to pay. Now, with sole proprietorships, they do actually make you make quarterly payments on your taxes, and these are actually estimated payments. So what I actually do is I have my accountant look at the revenue from last year and any other trends that they can take into consideration, like our current growth and income, right? And then what they do is they make a projection on how much revenue, or rather taxes, we should be spending each quarter. And so then they give us that estimation. What we do is we make estimated quarterly payments. Then at the end of the year, what we do is we look at all of our payments that we've done in for estimates, and then what we've actually made in revenue and spent on expenses. And then we determine, okay, did we pay too much or did we not pay enough, right? And if we paid too much, then we get some money back. If we didn't pay enough, we pay a little check at the end of the year to the IRS, and then our taxes are taken care of. And the last thing that I do want to mention is, again, like I said in the beginning, if you do have a sole proprietorship, you don't actually have to have a tax ID or an EIN, an employee identification number. You can choose to do things through your personal checking account and through your social security number when you file your taxes. It's really up to you how you choose to do it. Even though you're not technically required to do so, I would still get a business tax ID and business checking account to run all of your business transactions through. It does make it a little easier, so that way you can keep business separated from personal expenses and things things that really don't kind of go along with the business. Now let's talk about how to pay business taxes as a partnership. Partnerships are essentially just businesses that are operated by 2 or more people. This means that essentially there are actually 2 owners or more in the business. And there are 2 types. There are limited partnerships and limited liability partnerships. And really they aren't that different from each other. Basically, a limited liability partnership is more similar to an LLC, meaning that the liability is kind of put on the business, but it's still sort of on the partnership as well. If you're confused at all by the 2, then make sure to go ahead and reach out to your tax accountant so that way they can discuss it with you. Now, your partnership will have to file an annual information return, and this shows things like your income, your deductions, things of that nature. But the difference is the business itself doesn't actually pay any income tax. Instead, what they practice is called pass-through taxation, meaning that the taxes are actually passed through to the owners, and so they don't actually have to pay corporate tax rates. Now, how this works is basically if you're a partnership and you're 50-50, then that means you split the taxes 50-50. But if someone has 60% and the other partner has 40, then the partner with 60% pays 60% of the taxes, where the partner with 40 only pays 40%. And again, you do pay these taxes on your personal income statement, but if you're actually paying yourself a dividend from the business's income instead of a salary, then actually what you can do is pay the business income taxes through the business instead of your own income, because it's not considered personal income, it's actually considered a dividend, which is a form of basically ownership payout. Now, if you choose to pay yourself a salary, then all you do is cut yourself a check each month and make sure that you're paying taxes out of your personal income instead. Again, the only issue with this is that now you're going to have to pay employment taxes as well, like your Social Security and Medicaid, things like that. Whereas with dividends, you're not actually paying that type of tax because of the fact that it's a dividend. It's not considered a personal income from business operations. All right, now let's talk about how to pay taxes for a corporation. Really, with corporations, everything is legally separate from the owner, meaning that the business owner doesn't pay taxes on the business. The business pays the income taxes based on their income and expenses, things like that. Now, there are 2 types of tax corporations. There's an S Corp and a C Corp. Really, the biggest difference between an S Corp and a C Corp is that S Corps allow for pass-through taxation, meaning that if you wanted to put it on your personal income statement, you could. Whereas a C Corporation cannot do that. They're not allowed to do pass-through taxation. The business entity itself has to pay the income taxes. Corporations are essentially responsible for something called double taxation, meaning that they're actually going to have their profits taxed first. Really, corporations are subject to something called double taxation, which means the corporation is actually going to pay taxes on any income, but then also the shareholders are going to have to pay taxes again after that. So there's a big difference there because of the fact that you are taxed twice, meaning you're not going to pull in as much money. But this is something that corporations have to do. There's nothing really that you can do to get around it other than any of the commonly known loopholes that currently exist out there. Next, we'll look at how to pay taxes as an LLC. And most of you are going to set yourself up as an LLC because this puts all of the responsibility, or really the liability, on the business itself instead of you as an individual. Now, the cool thing with an LLC is you can actually elect to choose whether you want to file as an S Corp or a C Corp, which is pretty cool. Alternatively, you could also be subject to pass-through taxation, meaning you pay it on your personal income taxes. But like I mentioned previously, if you're paying yourself a salary, is pretty much the only way that you're going to have to pay taxes on your personal income statement. Otherwise, what you can actually do is take a dividend each month instead of paying yourself a salary. What this is going to allow you to do is not have to pay taxes on your personal income for that revenue because it's already been taxed through the business. Whereas if you actually set up a salary for yourself and pay yourself a check each month with a pay stub, that's a little different. You're actually considered to be taking a salary, meaning that you also have to pay employee taxes on that, or employer taxes on that. So that means you're paying into Social Security and Medicaid. Whereas if you're paying the dividend out to yourself, you actually don't have to do that. So guys, that's pretty much it for those 4 different types of taxation. But again, you can see how it can definitely get confusing without some form of guidance. And that's what tax accountants are so great for, because if I ever have a question, I call up my buddy Greg and I'm like, yo, what do I need to do here? And the good thing is, yes, I've known Greg for a very long time, but at the same time, you know, it's a valuable service service that even if he wasn't willing to help me at all, I'd still want to pay for because of how much information I've been able to gather about my business. And then not only that, but the money that I've been able to save from not missing out on things that we can write off on our taxes or something like that. So speaking of that, let's talk about the actual documentation you're going to need and things that you can write off on your taxes. So if you guys see me looking down, I'm looking at my list right here because there are quite a few things that you're going to want, but we'll name them off so that way you guys can have an idea of what to look for. Basically, you'll want last year's business tax return if you have one. If you don't, then you don't need one, right? If you're a new business, you won't need that. You'll want payroll documents if you have employees that you're running payroll through, because you will have to pay separate taxes there. Bank and credit card statements, you'll want to, downloads of all of those that you can send over to your tax accountant. Any accounting documents, your partnership agreements, so that way they know, who's paying what amount. And then your depreciation schedules if you have any, large assets, let's say like a vehicle or something like that. How long have you set that vehicle to depreciate over and what's the schedule of it? Some other documents you're going to want are gross receipts, checking and saving account interest, right? If you accrue any interest on any of the money that you have sitting in a bank, you actually have to pay taxes on that. Returns and allowances, sales records or unclassified income, employee wages, insurance premiums, professional fees, right? Any contractor payments that you put out there. Office rent, that's a great thing because you can actually write that one off. Or say you work from home, you can actually write off a part of your mortgage or rent that you're paying on your home, and you should. Transportation and travel expenses, advertising costs, office supplies and equipment, phones and other communication devices. These are all things that you're going to want to have on hand. So really quick question, guys, do you use Quickbooks or anything like that to track your financials and to organize everything for you so that way you know where your money's actually going? If you do, write yes and what platform you use for financial tracking. I'm interested to know what you guys use. If you don't, write no and tell me why you haven't set something up. Are they too expensive or what is it? What I want you to do is if you think it's too expensive, I want you to go right below this video in the description. There's a link there for Quickbooks and they have options from $5 all the way up to, several hundreds to thousands if you're a bigger corporation. It's $5 to $10 per month. You can set up something for your business that's going to track everything and then even allow you to categorize it so you can see where your money's actually being spent. And then not only that, how much money you're pulling in so that way you can figure out where you can start to grow and expand and hire on new people in the future. Now, really quickly, let's talk about some allowable deductions that you can actually take off on your taxes, meaning you save more money. Spending money is not always a bad thing because it allows you to write it off for taxes later. Okay, so let's talk about some of those deductions that you could have. Now, this is based on the legal structure of your business, so make sure to talk with your tax accountant about this. But some of the things that we're going to talk about are your vehicle expense. It doesn't matter if the company owns it or not. If you're using it for business, which all of you are, then you should be writing off the expense of it. Insurance. 100% of your premiums can be written off. And this is your car insurance, your house, your renter's insurance, whatever insurance you're paying. If it goes into an expense of your business, then you can write some of that off. 100% of the premium. Your rent, like we mentioned, you can only do so much square footage. Obviously, I work in my home, right? But my entire home is not my office. I only do so many square feet of my home as a taxed area, right? Or as a taxable area that we use for space for work. Next is any startup costs. And this is things to open your agency, like paying for the LLC license, taking any educational training or courses. That can be considered continuing education for your business, right? So you could actually write off the Serial Entrepreneur course when you take it, right? That's one of the great benefits. And finally, any interests on business loans, any credit cards or mortgage, negative interest, not positive interest, but any negative interest, you actually can write all of that off too. So there's several things, and trust me, you can get into food, it can get into your phone bill, your internet bill, everything you can pretty much write off as long as it's used for a business expense, right? You can't write off things like your suit, right? You can't buy a suit and write that off because that could be argued, right? You can easily use that suit way past the business realm, but there are several things that you can write off, and I recommend talking to your accountant about all of your expenses so that way you can get an idea of what you can write off. Now, for virtual agencies, you guys pay taxes in every state that you have a team operating in. So if you have a team operating in Texas and you're in Florida and they're going out in Texas and finding clients and generating revenue, then you actually will have to pay taxes in that state as well because they're operating in that state and they're actually, collecting income in that state. Even if they're operating virtually, that's how that works. Freelancers. Here's what's cool about you guys. You do not have to pay employer taxes on freelancers, okay? You're actually considered self self-employed. So what we do as a business owner is 1099 any freelancers. So we don't actually have to pay employer taxes on them. That's why freelancers are so great. That's extra money saved. I hire an employee, I pay employer taxes every time I pay them a paycheck, every single time. So that's an added expense that I have to take into consideration. It's not something you necessarily want in the beginning. Now, since a lot of you are very small businesses, you're not going to be targeted by the IRS. It's usually when you start to become a larger business and take on revenue that they actually even take the time to look at you. If you're ever contacted by the IRS, just make sure that you reach out to your tax accountant or some sort of legal representative to make sure that you get the necessary help to make sure that situation is taken care of properly. So that's it for today's video, guys. Thank you so much for watching. Make sure that you leave a comment telling me what you learned in this video and what's going to be the most beneficial thing to you. The best comment is going to win 3 months to the Marketing Agency Mentorship Program. But that's it for this video. Since you stayed till the end, all you have to do is click up here in the top right-hand corner and we will show you how to price your services for your marketing agency. It's the best video out there, I promise, so make sure to check that out. But that's it for this one, and I will see you guys on the next training. Until then, Serial Entrepreneur out. Bye, guys.
Ready to start living the six-figure work wherever, be your own boss lifestyle? Well, at Serial Entrepreneur Academy, we'll teach you how to use a laptop and internet to start your own social media and digital marketing agency. Get started with our free Facebook ads training. Links in the description below, guys. See you in the course. Serial Entrepreneur out.